If you've been following the stock market lately, you know that there have been some major swings. Especially recently, we're seeing some major losses based on the recent sell-off in the equities market. Let's take a look at what I'm buying. What am I selling? What does my dividend income look like? What is my plan for 2022? This is a portfolio that I started just about a year ago from zero. The first holding I want to talk about is ATD. This company is on growth mode, having recently acquired 19 high-quality convenience stores and 2 non-operating properties across New Mexico. As of right now in ATD, I have 28 shares with a book value of $1,200 and a market value just under $13.60. With dividends included, I'm up 11.44%, and this stock makes up 2.4% of my overall portfolio, with a yield on cost at 1%. This is not a high yield stock. This has a lower yield, but what you get is capital appreciation and high dividend growth. Next up is BMO. This is one of the big 16 banks, and to me this is an excellent investment. Doesn't matter if you're just starting out or on the tail end of your investment journey and you're just looking to supplement your retirement income. I currently have 21 shares of BMO with a book value just over $2,500, a market value over $3,000, and with dividends included, I'm up close to 22% on this holding, and the stock BMO makes up 5.4% of my overall portfolio with a yield on cost at 4.45%. With BMO, this is a good mix between dividend yield, dividend growth, and capital appreciation. Next up is a very cool and nifty ETF that I started a position in recently. It's a Bitcoin tracking ETF, but not just any Bitcoin tracking ETF, it's one that comes with a yield based on a covered call strategy. And if you don't know what options are and how options work, specifically covered calls, make sure to check out this video to understand the basics around options trading. Let's take a look at this holding and wait till you see the yield on this ETF. I currently have 38 units of this Bitcoin ETF with a book value under $400 and a market value less than $260. No shock here, Bitcoin and all other cryptocurrencies have been seeing a massive sell-off recently, especially out in early 2022. So if you factor in my small dividends that I've received, I've only had this holding for about a month or so, I'm down roughly 31.5%. I'm not too worried about it because it only makes up 0.5% of my overall portfolio. And check out this yield. It comes in at 12.2%. That's a pretty good yield. And that's the reason I'm okay with being down about 31%. I get a very nice yield. So this is a very speculative play. I don't know if the yield is going to get cut, if it's going to go up. Not too much at risk. Let's see where this goes. Next up is Dream Unlimited. And this has been an amazing performer. I only wish I had more shares of this. But because of my disciplined investing approach, even though I wish I had more shares, I'm okay where it's at right now because I stick to a very strategic asset allocation strategy, and this keeps my emotions intact. I don't get emotionally involved in investing. It's purely strategic because a lot of investors get too emotionally involved in their investments and they don't know when to buy or sell. So that's why you need a strategic plan on what are you adding to your portfolio, what are you selling, and why. Dream is a leading developer of office and residential assets across Canada and the United States. The assets that they own across the 2 countries are super high quality and income generating. This is perfect if you're looking for growth in terms of capital appreciation and income along the way. So for Dream Unlimited, I only have 9 shares in my holdings with a book value of $230 and a market value of $350. Taking a look at my small dividends, my total return on Dream is over 50%. And this makes up roughly 0.6 of my overall portfolio with a yield on cost at 1.56%. ECN Capital, it made major news recently, having sold a third of its portfolio and having declared a $7.50 special dividend per share. And I want to talk about that for a little bit. What that dividend meant in terms for its stock price. Let's take a detailed look at my holdings for ECN. I have 37 shares with a book value of $268 and a market value of $195. That means I have an open loss of 27%. But if you factor in my dividends, my true gain is actually up 26%. And right now, it makes up 0.3% of my overall portfolio, having a dividend yield of 1.66%. Let's talk about that difference. What is the difference between this open loss and this total gain? Because on one side, I'm down 27%. On the other, I'm up 26%. And that's because ECN recently sold a third of their business, having declared a special one-time dividend of $7.50 per share. This special dividend resulted in a reduction in the stock price by the very same amount. But prior to this dividend, the stock was currently trading around $11-12 a share. Take away $7.50, you end up at about $5 or so. And that's why I've said on this channel numerous times, dividends are not a free lunch. Whatever company pays out a dividend, that dividend results in a reduction in the stock price, because dividends are built into the stock price itself. So when dividends get paid, the stock price drops by the same amount. And because of the market is a live market, you will see normal fluctuations. You don't really see a small drop if companies are paying out routine dividends. But with ECN, this was amplified because they paid out a $7.50 special dividend. You can really see the difference between pre-dividends and post-dividends in terms of the stock price. But on a net basis, this means no change to the investor. Either you have cash on hand in terms of dividends, or you have the stock price. Together, it's the exact same value. ENGH, Enghouse Systems Limited, another tech service stock going through a bear market. The strategy for Enghouse is simple: grow through acquisitions and pay a growing dividend year over year. And right now, the entire tech sector has been battered due to a market sell-off. But to me, that's not a bad thing. If you have high quality tech assets or tech stocks in your portfolio, this might be a good time to pick up more shares at a discounted price. So with Enghouse in particular, I have 25 shares with a book value just under $1,400 and a market value of $1,100. Looking at my gain with dividends, I'm down just over 19%, and this makes up 2% of my overall portfolio with a yield on cost at 1.15%. To me, Enghouse right now being discounted by 20%, it's a great opportunity to pick up more shares. ETHY.B. Just like with the Bitcoin yield ETF that I showed earlier in this video, this is the exact same type of ETF, but tracking Ethereum. And this ETF also pays a very hefty monthly yield. This is another risky play, and although I'm not a high yield chaser, this is more of a speculative play. I get to collect dividends from both the Bitcoin ETF and the Ethereum ETF with a high yield on a monthly basis. And we'll see how it works out. So with this particular ETF, I have 37 units with a book value just over $400 and a market value around $237. With my dividends, I'm down close to 40% for this particular holding, and this makes up 0.4% of my overall portfolio with a yield on cost at over 17%. So that's why I'm not too worried about this particular ETF. We'll see what the monthly distributions look like going forward. This is a very high yield ETF, very speculative, so be wary if you want to add this to your portfolio. And right now, if I look at it, because it only makes up 0.4% of my overall portfolio, I may pick up a few shares to bring this ratio up to 0.5%. Granite REIT, GRT. This is a very balanced industrial REIT. This is perfect for growth and dividends. Let's take a look at my detailed holdings. For Granite REIT, I have 11 shares with a book value just under $900 and a market value over $1,030. With the dividends factored in, I'm up over 18% with this holding, and Granite REIT makes up 1.8% of my overall portfolio with a yield on cost at 3.82%. I'm up close to 20% on this holding. I have a roughly around 4% yield. This is a perfect balance, just like BMO, for dividend growth, and capital appreciation. So for sure, in 2022, I'll be picking up more shares of Granite REIT. MRU, or Metro Inc. This is another well-balanced stock. Inflation is sky high, but people still need to eat food and get groceries just to survive. And that's where defensive sectors like MRU come in as a hedge against inflation. In terms of my holdings for MRU, I have 16 shares with a book value over $900 and a market value over $1,000. Factoring in my dividends, I'm up over 11% for this holding, and MRU makes up 1.8% of my overall portfolio with a yield on cost at 1.73%. For my next two portfolio holdings, I want to talk about them together because they are Royal Bank and TD. Just like BMO, they form part of the big 6 banks in Canada. And these big international banks, who are not just in Canada, but they are spread across the world, make a ton of money on everything they touch. They're known for rewarding their shareholders. They make money in both the good times and the bad times. The big banks, to me, are the perfect buy and hold forever stocks. So for sure in 2022, I'll be picking up more shares of BMO, Royal Bank, and TD. Let's take a look at my holdings. First, let's talk about Royal Bank. For RBC, I have 21 shares with a book value over $2,500 and a market value of over $3,000. Factoring in my dividends, I'm up over 21%, and this makes up 5.4% of my overall portfolio with a yield on cost just shy of 4%. For TD, I have 30 shares, same book value, roughly around $2,500, and a market value just over $3,000. Factor in my dividends, and I'm up just under 20%, and this makes up 5.3% of my overall portfolio with a yield on cost over 4%. Let's talk about one more holding, Allegist, or SYZ. This is another tech stock that's been battered by the bear market but has been known to pay a growing dividend. They recently acquired a SaaS company or software as a service back in October of 2021. The company they acquired had an average growth rate of over 20% per year. So this is another company that grows through acquisitions. The more companies they acquire, the more revenues they increase, the more dividends get paid out to shareholders like you and I. Even with a paper loss of about 20% on this particular holding, I'm holding for the long run. Let's take a look at the details. With Sylogist, I have 31 shares with a book value just shy of $500 and a market value over $370. Factor in the dividends, and I'm down 18.45%, and this makes up 0.7% of my overall portfolio with a yield on cost at 3.3%. These are my overall holdings in a nutshell, some of the big major moves that have been happening. Let's take a look at the totals. What does my total portfolio look like? Looking at the total line, I have 1,137 shares split across all my holdings with a book value just shy of $55,000. And remember, this is a portfolio that I started from scratch. And if you've been following the channel, you know exactly how I've grown this portfolio from zero all the way to $55,000 where it is today. Taking a look at the market value, it's at $56,000. I'm up 2.39% or an open gain of $1,300. Factor in my lifetime dividends received of close to $1,000 and my total gain jumps to close to $2,300. That's a total return of close to 4.2%. Even with the markets down, as you've seen recently, I'm still up over 4%, and that's why it's important to diversify your holdings. Understand what you're holding, what you're selling, because you don't want to be in a position where you feel stuck with certain holdings, not knowing what to do. Diversification, due diligence, research, these are all keys when it comes to building a well-balanced portfolio, especially for the long run. So that gives my overall portfolio a yield of 3.12%. And to me, this particular yield is a very happy medium between higher yield and dividend growth. By the way, if you're new to the channel or you've seen my content before, do me a huge favor. Hit that like, subscribe, and thanks button because it lets me know to produce more content like this and you don't miss out on future portfolio updates. Let's take a look at some of my other tabs and what they mean. Taking a look at my dividend analysis tab. This tab highlights my dividend growth since inception because this portfolio is not a year old yet. You're not seeing growth right now. But for example, let's say if today was April 30th. 2022, I can actually see how much these dividend rates have gone up from a year ago. So for example, if today was April, my growth in AP based on the dividends they paid out would be just under 3%. And for example, for holdings like Empire, that would give me a 15% growth, 3% on Granite Read. And that's what this tracker is for, to see which one of my holdings is actually growing their dividend. Because if they're not growing their dividends, then maybe I don't need to hold them. Maybe I need to sell that holding for a different dividend growth stock. And this chart right here shows me exactly which company is paying out what dividend when, and is it growing? This is why this is my dividend analysis tab. So what does all this dividend growth actually translate into? Well, it translates into dividend income. You want your dividend income to keep growing faster than inflation, which means your buying power also goes up. So let's take a look at what my dividend income looks like. Taking a look at my dividend income for the year of 2021, with all my holdings, I was able to earn over $1,000 in dividends throughout 2021. But for the first 4 months of 2022, I'm expecting $510. And obviously, the more I add to this portfolio, the more dividend growth I see. This number should only go higher. And going on the left-hand side, I can see exactly when I can expect payments and at what time. So for example, in the month of February, I'm expecting $2.61 from National Bank with a yield of 3.6%. Coming on the 1st of February. February 12th is when SIS pays 59 cents. This helps me track exactly when my dividends are getting paid out, from which entity, and the yield per payment. And if you're interested in tracking your portfolio the exact same way I do, you can actually download this exact spreadsheet and track your portfolio. I have built it from the ground up for investors like you and I. So you can forecast your dividend income, keep track of your historical dividend income, what stocks are up, what stocks are down, what is your TFSA contribution, etc. As an investor, you need the right tools to track and grow your portfolio. Do yourself a favor. Download a copy today, link in the description. So this is where my portfolio is at today. Now let's see, since inception, how I've done. Moving on to the historical tab, you can see that I started my portfolio back in February of 2021 with $150. And today, this portfolio is worth over $56,000 with a growth rate of 4.66%. And you can see January has just been hammered because in December, I was up 8% and I'm down to a 4% growth because of the massive sell-off we're seeing in January so far. So what is my advice to investors who are worried about this sell-off? If you know why you're holding your stocks, if you have your investment thesis on why you purchased them in the first place, knowing that too much of your portfolio is at risk, that means your risk tolerance is too high. You need to adjust your risk tolerance. Maybe 100% equities is not for you. Or maybe you got into high-flying penny stocks because you saw a post on Reddit or a post on whatever other social media. You have to understand you need to do your research and due diligence on why you're buying that stock. Don't just blindly pick up stocks based on the next Reddit post, based on next TikTok video. You need to do your research. Do the fundamentals make sense? Now, because this is a dividend growth portfolio, one metric I like to talk about is my dividend income per hour. So if you take a look at my dividend income per hour based on all the dividends I've received, my dividend income per hour is 84 cents per hour, meaning I get paid to do absolutely nothing 84 cents on the hour. In terms of the calculation of how I get to 84 cents, if I take a look at my dividend income from January to March, that's $431. Between Jan and March of 2022, there are 64 working days. So if you do the math, you end up with 84 cents per hour. That's $6.75 per day based on an 8-hour workday schedule, or $141 per month to do absolutely nothing but just exist. You could be sleeping, you're making this money. You could be outside, traveling, doing whatever you want, and you still get paid. That's what financial freedom means. That's what financial independence means. So figure out where you want to be in your financial journey. How do you get there? And how can you build a portfolio to reach those objectives? Seeing these dividends roll into my account almost on a daily basis, psychologically, this helps me stick to my investing plan. Dividend growth stocks or ETFs can help ensure a safer retirement plan no matter how long you live. Because the single biggest enemy of long-term returns is human emotions. If dividends help you stay the course, so be it. Human nature makes market timing the biggest danger in achieving your overall long-term portfolio objectives. So keep your emotions at bay and come up with a strategic plan on what you need to invest in and stick to your plan. The appeal of dividend investing comes from the ability to generate an income stream from your portfolio. It's similar to that of a rental portfolio where you're collecting rental income, but with just a lot less work. It's the closest thing you have to building your own pension plan, because living off dividends takes away the fear of outliving your money. And that's the beauty of dividend investing. After you buy a stock, you don't have to do anything at all. Just sit there and collect your dividend checks each and every month or on a quarterly basis. And the cool thing is the company just sends you money. After a few months, they'll send you even more money. At some point, you may feel guilty with all the money you're collecting. Actually, probably not. Let's take a quick run through of my market value pie. As you can see, these are my biggest holdings based on the size of the block you're seeing. So VGG, RY, BMO, these are my biggest holdings. TD and Enbridge round out the top 5. And some of my more speculative plays are at the bottom. They make up very small portions of my portfolio, such as the Bitcoin ETF, the Ethereum ETF, or ECN Capital. Taking a look at my gain or loss, you can see exactly from a visual standpoint what are my biggest upsides. For example, BMO, I'm up $500. Here's another big one. TD, I'm up $452. On this one, orange represents a loss. So for Enghouse, I'm down $275. So visually, I can see which ones are up, which ones are down, and how they make up my overall gain of $1,300. Take a look at my yield tracker tab. This shows me what are my biggest yields, what are my smallest yield plays. These 5 holdings make up the largest yield of my overall portfolio. As you can see, I have some stocks that pay a very modest yield, around 1% or even lower. And overall, just Q1 of 2022, I'm at a 4% average yield. And this tab right here helps me track that yield growth or drop. So for AP, I had a yield of 3.98%. This has grown to 4.1% in 2022. If I look at BMO as an example, in 2021, I had a yield of 3.68%. And after the big bank stocks announced major dividend increases, my yield on BMO, TDRY has ballooned to over 4%. All these tabs, all these various metrics, they're there for a reason. They help me analyze my portfolio. Why do I own these holdings? Does it make sense for me to continue holding on to them? And every single metric, every single analysis tab helps take the emotions out of investing. I'm never at a point where I feel stuck. I can make a decision looking at the numbers, looking at the facts. And that's what you want to do if you want to build a portfolio for the long run. Look at the facts, look at the metrics, use this tracker, see how your portfolio is tracking. Thank you so much for watching. Make sure to check out all the links in the description. It supports the content and it supports future content. And I'll talk to you in the comment section.